Hi traders, thanks for stopping by thetradinganalyst.com. This is Taylor and we're going to take a look at a bunch of charts here and I'm going to give my analysis and my thought process, and you're going to walk away from this video with some newfound knowledge on technical analysis as well as hopefully some profitable trade ideas based off of this free analysis video we're about to give you right now. But first, if you're not already a member at thetradinganalyst.com, visit us on the homepage and get to know us a little bit better. If you like these free videos we give to you on a daily basis, it's nothing in comparison to the membership you get when you sign up and join the premium membership. As soon as you sign up and join the premium membership, you're going to get instant access to the profitable trade alerts that our current members get on a daily and weekly basis. It's a great opportunity for you to improve your trading and start making winning trades in the market. All right, so let's take a look at the charts here. We're going to start off with Alibaba, and I want to point out this main thing. Going back to the beginning of 2017, we've had this trend line here. So you can see there's a bounce, and look at it just grind up it right here for several months. We hit it several times, just day after day, so many hits against the trend line right there. All right, then we have it hitting that trend line right here, again right here, and then finally we broke that trend line right here. All right, so this is a year-long trend line that has gotten hit many times that is breaking right now. All right, we're also below the 50-day moving average. All right, that's another thing. It's also a rising wedge pattern as well. Okay, and this is very similar if you look back here to previously in the middle of 2016, very similar pattern here that got broken right here, and you can see we saw some downside after that. Okay, clearly we bounced huge after that. Okay, and honestly that's probably what would happen more so with this pattern here as well. But we did head lower in that near term. And the other thing too that you want to note is that if you look at this pattern right here, look at how high this pattern went. This is a $30 pattern, all right, $30 pattern. And look at it, the size of it compared to this pattern, all right? So we've got a bigger pattern right here. So to me, this could be weighing more heavily on Alibaba than this pattern right here, just given the size and veracity of that pattern when compared to that. So what I want to point out here is that we've got this pattern that broke. We're below the 50-day moving average. We've got and this is perfect too, as we headed higher here on price, you can see that the indicators here were trending lower. All right, and that's what you kind of want to see as a clue for these kind of rising wedge patterns or the falling wedge patterns or what have you. So we broke below that pattern here. To me, conservative target 164. I posted this chart here earlier last week, just the chart itself, not a video, right here, and I said we're likely going to head lower here. We're already about $6 lower than where we were when I posted that chart. So I do think it has lower to go. I think it has at least $10 lower to go. As far as short-term bounce levels, right here, I definitely think it can get a bounce here. But to me right here, I think it's going to head lower from 180 down to about 164. And if you look at this, you know, I'm not calling for some kind of big crash on Alibaba. Okay, this is just a little blip here. I mean, this is a huge, massive uptrend. All right, huge, massive uptrend. Very few dips. So it's kind of due for some kind of a little mini dip here. Okay, and if you think about it, from 180 down to 164. You know, that's about a $16 drop. I mean, that's the same as we dropped from maybe right here to right here, which actually we called for as well. So no big deal here, guys, at this point. I mean, could it head lower? Yeah, it can definitely head lower. But for right now, we're just targeting about 164 here on Alibaba. The next one we're going to take a look at is Netflix. And this is another one that I think is going to head lower here. I'm going to go over exactly why, because there's a bigger story here other than just this action here. Okay, so we covered Netflix here back when earnings came out here. All right, earnings came out. It was either, I believe the reaction to earnings was this day right here, the 17th of October. And as you can see, the day before, we had this kind of what could have been a breakout candle, but right now, because the following day reacted how it did, these are two reversal candles right here, and they did so with heavy volume, okay? And notice how the rest of the market broke out here, and Netflix was never able to break these highs, all right? So the reason this is important here is because this is earnings, all right? This is earnings, and earnings is really what moves stocks a lot of the times, okay? Because that's the progress of the company. You know, I don't want to get too much into fundamental analysis, but, you know, that's what drives stock prices up. If you just go over to Amazon really quick, you know, look at what happened to Amazon, okay? This was an earnings reaction, okay? And you can see here, it blasted off. We broke over a new all-time high, and then we blasted off since then, okay? So that's what earnings can do. It also can happen the other direction where we head lower. So earnings really drives the movement in stocks. So I just wanted to show you that example on Amazon. So with that said, so we have that on Netflix, and then right here we have this false breakout here on Netflix. So what do I mean by that? Well, we had this resistance here. You can clearly see that right there. And then we broke over it right here. All right. Following day, boom. I mean, we broke not only the low of the previous day, but we broke these lows here and broke these lows here all in one day. Okay. Kind of wipe that out in one day. All right. Not very good action here on Netflix. And for those of you watching saying, oh, well, the market took a big dump. Well, not every single stock got hit, okay? So it matters if a particular stock got hit. And not only that, but some stocks got hit a lot worse, and Netflix was one of the ones that got hit pretty bad, okay? So you want to pay attention to that moving forward. So I do think it's going to head lower into at least this trend line right here, potentially even lower, because if you look at this trend line, this is a massive uptrend that started here back in the summer of 2016. There's where it started. There's a bounce. Here's a bounce. Here's a direct hit on it right here of July of this year. And we're coming into that trend line right here. Okay, so we could definitely get a bounce here. And I really want to see, let's see if it bounces here. I still think it has some work to do. And that I'm not really going to be bullish on Netflix until I see how it reacts to this trend line, and B, if we can get some kind of a breakout over 197. Better believe that if it does eventually break over that level, which, I mean, we're in a huge bull market right now, and it's probably eventually going to do that. But when it does that, then we can look for a breakout. But until that happens, until we see how it reacts to this trend line, Netflix is looking weak here to me. And I'm really talking in the very, very short term. You know, obviously, you know, don't be stupid. I'm not stupid. We're in a massive uptrend here, okay? There's no denying that, okay? All I got to do is look back a year and a half and you can see this massive uptrend, okay? So really just want to pay attention to these short-term price movements is all that I'm talking about. All right, so the next one we're going to take a look at is Google. And Google here is looking, I've got a couple of things to say about Google here. You know, obviously, just like the other ones we've talked about, in a massive, massive uptrend, okay? But if you look at a couple of different characteristics about the recent action, you've got some cause for concern in the very, very short term. And why do I say that? Okay, why do I say that? Well, we have this high that was made here, and here you can see it's rejected here, and then so you can clearly see that's a level of resistance. we broke over that level of resistance, okay, right there. So looked very bullish, all right? Then the following 2 days, we broke back under that resistance, okay? So that is a false breakout. When you break over resistance, okay, that's going to be a breakout, but then it breaks back under right away. That makes it a false breakout. So this is a clear rejection of these price points, and you can see we headed lower ever since. And right here, we closed just below this support on Friday. Okay, so the play that I like the most on Google is not necessarily shorting here or anything like that, but I like it actually for a long if we get down to about 980. All right, 980 to me is a great buying opportunity. And I'm not saying it's heading down here for sure or anything like that. All you can do is prepare, okay? All you can do is prepare. If it doesn't head down here, then who cares? I got my money in my pocket. No trade was placed. Who cares, all right? So the reason why I like Google for a bounce against this level here is because, for one, we've got this is a major level here, right here, going back here to about 920. You can see how many times it bounced off of it. Big support, and it's a major low, okay? So we have, why am I pointing that out? Because we have a Fibonacci retracement level. If you draw it from this main level here that I pointed out to this main high, the all-time high up here, then you get that 61.8. You can see the 61.8 on the left-hand side of the screen. Goes across here, right here, into about 980. And also that Fibonacci retracement level lines up with this very nice uptrend line that started right here, got a bounce here, couple bounces here, there, here's a bounce, and then that lines up perfectly with this level right there. So I think that if we head lower, that's going to be a great buying opportunity. Another level that I want to point out is if that trend line somehow breaks and we head even lower, then an even bigger buying opportunity. This is such a massive opportunity if we head lower, let me tell you, because we've got a huge level of support based off of this trend line. If you look at the weekly chart here, going back all the way to the 2009 bottom, all right? Well, actually, that was the end of 2008, but it doesn't really matter. So we started here. Okay, this is going back 8-9 years. Okay, this is a huge trend line. Got a trend line here, started there, couple bounces here, bounces here. Look at it just grind up it right here. So many touches, so many touches. You can really tell this is a key important level here. Here's a bounce against that trend line. Here's a bounce against that trend line. And you can see here it is right there for us on that trend line, okay? And it lines up pretty well with this support as well. So since it's a weekly trend line, you know, we could get a big break below this. We could even come down and fill this gap and then end up closing back above the trend line on a weekly basis. So really want to focus on that level here. And again, I'm not saying that Google is heading down there. I'm just saying that if it does head down there, because it's entirely possible. We're in a massive uptrend in the market, but who knows? You never know what could happen. So it's better to be prepared for bounces, because what happens is people aren't prepared for the market to dip, okay? When it dips, it catches everyone by surprise, and they aren't prepared of how to react, okay? And you get punched in the mouth, all right? There's that quote that everyone likes to throw around there. You know, you have a plan. It's a Mike Tyson quote. Everybody has a plan until they get punched in the face, all right? Well, this is what you have to do. You have to have a plan for when you get punched in the face, all right? And we aren't going to get punched in the face, all right? We're just going to have a plan for if the market drops, because if the market drops, it's totally normal and it's not a big deal. We're going to look for bounces because it's in a massive uptrend. All right, so I'll get off my soapbox. But the next one we're going to take a look at is GoPro. And this is when we called for a bounce for against this trend line. And you can see it started right here. There's a bounce. and here we are bouncing right off that trend line. I still think it can get bounces here. I don't necessarily think that this is going to be the main low here for GoPro. I think it's going to probably retest up here near about 908 based off of this previous low here. So if we do head lower into about 816, 815, to me that's a buying opportunity, as I do think it's going to continue to get bounces. The next one is Twitter here, and Twitter is right here at this support level. You can see it was resistance there, here, and then we kind of messed with it a little bit here, and then you can see it was resistance there, and we're coming into that level. So we can definitely get a bounce here, but to me the best level to buy at is against 1850. And why is that? All right, well, we've got resistance here right there, so it's support now that we're above it. We also have, if you draw the Fibonacci retracement level from this major low that we had right here to the major high that we recently had, and you get the 61.8 Fibonacci retracement level, you can see that on the left-hand side of your screen. That matches up perfectly with that support, as well as this beautiful uptrend line right here. You can see has gotten bounces several times before, and they're all lining up with that level here. So we've got the previous resistance, which is now support. We've got the Fibonacci retracement level, and we've got the uptrend line all lining up in the same spot. Oops, and I forgot one last thing too. It's also the volume point of control right here. You can see this big red bar right here. That is the volume point of control. Okay, we have volume down here. This is volume per day. And this level is volume per price. So it shows you where the most volume has been traded. And the most volume has been traded right here on Twitter, right around 1850 to about 1750. And now that we're above that level, it's a level of support. So better believe that if Twitter heads down to that level, I'm going to be buying there. And that's going to be a great buying opportunity. You really, really want to keep your eye on that level for Twitter, because it's a huge, huge opportunity. Next one we're going to cover is Amazon. If I could just spell the symbol right. And Amazon here is an interesting one because Amazon is very, very strong, okay? And even on the days that the market got hit, Amazon really barely got hit, okay? Barely got hit, okay? So what I want to point out is we've got a little level here is if the market gets hit a little bit more, we've got a great buying opportunity right around 1,115, okay? 1,115. And why do I think it can get a bounce here? Well, for one, we've got the Fibonacci retracement level. If you draw it from the main low here to the main high here, and that lines up perfectly with this level. It's also a level of, it was previous level of resistance there, and then it turned into support a couple times right there. So that's a nice, easy level right there, very close by that you can play for bounces on Amazon. Amazon is a very, very strong stock, and you can see that it's getting hit a lot less than some of the other major ones like Google and Apple and Netflix and Baba and all the other ones that we've been covering today. So Amazon, to me, you can look for closer bounces than the other ones just because of how strong it is in not only the short term, but the long term as well. It's been a very, very nice trader, and I think can get a bounce against that level. So thank you for stopping by and watching the video. I really hope that you learned a lot and that you're going to take some good ideas from this video. If you want to take your trading up another notch, aside from these free videos that we give to you, then it's a great opportunity for you to join the premium membership. As soon as you join the premium membership, you're going to get instant access to the profitable trade alerts that we give to our members on a daily basis. It's a great opportunity for you, and we'd love to help you start making winning trades in the market.